Ports, first 4 months have increased. Yes, you've had some Black Sea restrictions, but I think moving forward for new crop, it's much better. But really there on the bottom, I'll focus on that one. Dr. Fauci created market optimism that might not be sustainable. Jim Cramer was saying that. And that's really, I think, the point of what I'm trying to say is that I think the max fear is behind us, but given how the market trades, it seems like now we're very over optimistic in a very quick way. So it seems like we could be, on a good stretch here for the next few weeks, but then be reminded that, oh, we're not even close to where we were back in November or December prior to this pandemic. So initially it could just be a little bit of a speed bump, is all I'm trying to say. Next slide is just some more things on coronavirus. I'll touch on this quickly. Social distancing is a theme for 2020, and I really question how much longer that's really going to go beyond 2020. It probably will, more than what we think. The stay-at-home orders, some are still implementing this, but really that bottom one, coronavirus doesn't scare me. I think if we're healthy individuals and we are showing no symptoms and we're fine, that doesn't really scare me. It's more the people's response to it that scares me. And I think based on that, it seems like people can create a lot of fear. And I think we're to the point where people are getting a little more comfortable with it, so that fear also of that is also being reduced. To go to the next slide once. This is a survey kind of done by our research department, and I'm not going to read all this, but basically what they found out is that as you go out and eat, wherever you are in the world, whenever you go out and eat, you're going to consume more meat, more red meat, more poultry. You're going to consume less grains, less vegetables, and the opposite is true when you stay at home. So when you stay at home, you're going to consume less meat, maybe a little more wheat products, and a little more vegetables. So given this, you have equal opposite kind of occurring. That yes, you can have a little more demand from a bread product perspective, but with the reduction of meat demand, that impacts the prices of agriculture a little more, because the lack of demand or the reduced demand from the meat sector, to me, offsets more of the increase of the wheat-based diet. And the other counter argument is, how much less are we now going out? How much less do we go to the coffee shop? Do we go out to eat as well? Do we just go and get snacks? I think everyone would agree we're consuming less than what we have in the past. So yes, there's some shift in demand, but I think the end result is that demand is less than what it was even back in December, just a few months ago. Next slide, looking at COVID as well from the meat industry perspective. One big thing, I know this was touched on earlier, that you're not able to process them. If you want to go to the next slide once. Question of demand on this, that really it's the function of demand destruction. Everybody is struggling, I think, to live the same lifestyle that we lived before this pandemic, whether you've lost a job or reduction in pay or just your business has been reduced. It's all influence and demand and the question marks around that. Next slide once. This is a look at the biggest consumer in the world, China. Growth prospects have been occurring a little better. This is the main market where everyone is focused from a demand perspective. So there's a few thoughts to kind of look at on this as well. The next slide is U.S.-China. Phase 1 was supposed to be leveling the playing field, but very quickly things change. But still, the thought is that everybody still wants to see this phase 1 occur. If you go to the next slide once, this shows really China's appetite right now. And China's really been a bit unique. They started off with Asian swine flu. Their demand was hit with that. Then they had COVID. It was hit with that. But now as China wakes back up and gets back to somewhat of a consumer type attitude, you're starting to see them import a little bit more as well. You can see this, I believe the upper left one is soybeans, then it goes corn, then it goes pork, and then sun oil. So you're starting to see, based on historical figures, that China is consuming a little bit more. So this is this is definitely a positive looking forward for demand. From a risk perspective, you would say there's less risk. There's more appetite for China, the world's biggest market, that they're buying a little bit more. So it's one of those things that the market is very quick to say, yes, China's buying, but it's going to take a while for the market to say they're buying, but yet we're still at 70% of what they were buying 8 months ago or even 6 months ago. So that topic I think will come out later, but right now everybody is just so focused on the fact that China's back, they're buying some demand. Next slide is the China trade war update. Again, there's a lot of issues going on right now with this phase one. The whole Hong Kong situation is providing a lot of question marks that if the U.S. is taking that stance with Hong Kong right now, will China back out of the phase one? And of course, everybody involved says, no, phase one stands by itself. They are moving forward as expected. So at this point, we have to believe it. Just this past week, actually yesterday, it was rumored that China actually was still buying Brazil and Argentina soybeans for September and October, which posed a big question mark because for soybeans September forward, it's supposed to be focused on the U.S. So I think maybe that's China's sly way of trying to show the U.S. about this whole Hong Kong situation. I don't know. That's just my opinion. But there in the bottom, one of the main things to look at for this whole phase one is really the DDGs and ethanol. If they start buying DDGs and ethanol, that shows that they are willing to hopefully adhere to this phase one situation. And unique enough, they actually did buy some ethanol more recently from the U.S., which helps promote the idea that China is trying to do this phase one to the best of their ability. Next slide, if you look at really the markets, it really feels like this. One day we're good, then we go upside down, then we go negative, we go positive. So there's a lot going on right now. We have this COVID situation, we have the fundamentals, we have some dryness in the Black Sea, we have some dryness in Western Europe, whenever we get that. So really, what does it mean for prices? The next slide, like I said before, the current panic has created some opportunity. You've seen from numerous slides that it's pushed commodity prices low because demand is low. But now we're getting into the point that, well, maybe the worst is behind us. So you can use that to your advantage. If you're a seller in the market, I think you can wait for some of this optimism, maybe wait for some weather premium to be added. But right now in this current environment, it does favor a consumer or somebody that's short the market that has to buy. Obviously, it favors that type of trader right now. So just some take-home points. The next slide. From a fear perspective, COVID has minimal impact on planting and growing. The meat production, the meat facilities have been influenced a little bit. Crops overall have been good. There's been rains in the southern Black Sea that have helped. Yes, you have some issues like in southern Russia, southern Ukraine that can't be repaired fully, but it seems like from the other areas of the Black Sea, they got a lot of benefit from the rains. One of the main points of risk is Western Europe, more France, Germany. Those areas still need some rain. Otherwise, the U.S. from a weather perspective is more or less okay. That shift to starch from the protein is going to be occurring, but again, does that exceed the demand loss from the meat-based diet? I tend to think it would not. Look for China to be a demand story as they kind of wake back up again, as they come back off of their lockdowns and Asian swine flu. Look for them to at least be coming back. So all of that tends to say the risk or the fear is getting lower, the worst is behind us. And there on the bottom, market is well supplied. And then the next slide, I just have a few last points. Some of the things I was looking at is VIX. Watch VIX. If you continue to see VIX come lower, that's another sign that says fear is being reduced. Watch unemployment, mortgage rate defaults. So there's ways you can track in the U.S. how many mortgage defaults are occurring. That's also a way that says if people are not going back to work, they're not able to pay their mortgage, which just flows into then they'll be consuming less, they'll be eating out less. So it's all connected economically. Then I also have here again, watch China. This is something not from a phase one perspective, but from a COVID-19, because Trump is definitely trying to point the finger at China. So how they react, how the world reacts to all of this as we get back to normal, I think is a legit question to be looking at, and to see if that creates more fear again as we get into summer and fall. There on the end, I tend to say USDA in May this month, we had some big numbers come out globally. Previous presentation went over some of that, but I tend to say, did the USDA throw maximum bearish information at the markets in May? That's something to consider. But from a fear perspective,